Good afternoon, everybody. Good afternoon, good afternoon. How is everybody doing? Just bear with me literally 10 seconds just whilst we go live on Facebook and YouTube and all that good stuff as well. So good to see so many names here already. I can tell that you guys are really interested in getting a cheeky free prize. We've got a really cool session today, guys. I'm going to take you through a full trade breakdown on GBPUSD, which I took yesterday as a follow-up from yesterday's live with us preparing for non-farm payroll. And it turned out to be an absolute doozy. It was a really good one, so I wanted to share it with you, not necessarily just to show you the results, but more so to show you the process. And as a trader, you need to nail the process in order to really start seeing the results and seeing the consistency come in. But before we do that, we'll say hi to the people that are here and are commenting. So hi Paul, hi Sammy, hi Mitch, hi Carl, hi Chris, hi Mike. Good to see you all here. I hope you're doing all really well. And then, of course, I believe that we're live on Facebook now as well, so we should see some comments coming in. Hi, Davidas. Hi, Sanjay. Hey, Kevin. Again, great to have all of you here. Thank you so much for joining. So before we start, hi, Bill. Before we start, I just want to remind you guys on the Facebook Live, if you can comment raffle. It's just easy for us to then keep tabs. For those that don't have Facebook, put it in here. But if you do have Facebook, make sure you comment raffle on the live video, and it gives you an extra ticket for the live event on the 22nd, where we're going to be giving away loads of free prizes that we have to offer. We do it every single year, and I genuinely have to say this year is the biggest year that we've had doing it. We are literally giving away thousands of pounds worth of prizes, so you guys should be really excited. All right. So yes, comment raffle. For those that comment raffle and you get an extra ticket, on Monday the 22nd at 12 o'clock, we will be hosting the live event. So I'm posting the link for the live event here. Make sure you register to it. All right, register, comment, and we will see you there. You can only claim your prize if you are on that live. So just make sure that you're on it. All right, especially if your name pops up, you don't want to miss out. So there we go. That's all the introduction. That's where we're now good to crack on with trading. So hopefully all of that makes sense, guys. All right. I want to make sure that all of you have a chance of winning those prizes. Bill has tagged Raffle House. I think he's accidentally done that. Hi, Steve. Hi, David. Hi, Slav. Hi, Jeanette. Hi, Bill. Hi, Sanjay. Great to have you all here. Okay, guys. So without further ado, we will crack on with today's live. All right. So let's get this going here. All right. And I wish my camera was working, but again, unfortunately, it's not wanting to work. So unfortunately, you don't get to see my beautiful face again today. We are without Andy, so you are dealing with the direct boss man for the day. I am technically Andy's boss because we all know everybody prefers me over Andy. All right. But no, in all seriousness, I thought it would be good to get a bit more of a different perspective, the way that I approach the markets. And it's always good for you guys to get a different perspective and a different point of view. We're all different. We all, learn in different ways, and different things resonate with different people. So I wanted to break down a trade on GBPUSD that made me literally just a few pounds over £3,000 as a return on GBPUSD, which actually hit profit this morning. All right. So this was a trade. We ended up getting filled at 1.3444. So we ended up getting filled just here. Literally, it did it within a couple of pips. And then the market consolidated and then dropped off and hit our target profit this morning. So I'm going to show you the whole process on how we identified that trade. Okay. So the very first step that I always take is I use our currency strength index. For those that don't know, the currency strength index is a really, really fantastic tool that we use as a filter to identify the opportunities. So these help us identify when a market is, or a currency is overbought, i.e. it's expensive, or a currency that is oversold, i.e. it's cheap. Now, when you match those currencies together, the two extremes, a currency that is cheap versus a currency that's expensive, you're expecting a relatively large move to happen in the market. It's just following the simple rule of supply and demand. So yesterday, just prior to non-farm payroll, I was actually looking at pound as a setup on the 4-hour time frame. And I was thinking, okay, pound is in an interesting area for us to start selling off. And the dollar was also in an interesting buy area. We had already had the buys since Friday. And then yesterday, we started to see, that movement up again. All right. So I was looking at buys on the dollar and sells on the pound. So overall, we're selling the pound, buying the dollar. We're therefore looking at a sell on GBPUSD. All right. That makes sense, guys? Everybody happy with that? I know there's a couple of minutes lag, but I'm going to be quite interactive with you guys today. I think it's important to kind of get your brains working rather than just mindlessly watch it. If you interact, you'll get probably a lot more from it, So hopefully that all makes sense straight away. There are a lot of people already in this chat room that have already worked closely with me. They've got a really good understanding on CSI and my process, but more so for the newer people, I just want to make sure that everybody understands that. Awesome. Yes, 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 yes. Great. That means I'm making sense. Absolutely perfect. I hope people can see my screen on Facebook, which I think they can. Great. So today it's a little bit more difficult because usually when Andy's doing everything, doing all the analysis and the lives, I'm in the background making sure that everything's streaming okay and making sure that we answer all the questions. And today I'm doing a little bit of everything. So apologies if there's a slight delay before moving on to the next section. Right. So we've identified the opportunity, and you guys understand that. We've done that through CSI. We've identified the opportunity, so we are looking for GBPUSD sells overall. A really, really, and I'm going to give away some really, really big secret sauce here, right? Loads of people get caught up on, I need to analyze price from years ago. Price is in a downtrend from August 2007 or November 2007. This looks like a downtrend. We're bouncing off of. No, there's no need to do that. What happened in price here isn't really relevant to what's happening with price right now. And this is what we call market context. Because this is the weekly time frame, we only really care about what is happening with price right now. All right. And that's really important. because we're not in the business of making money in a year's time. We're in the business of making money today or tomorrow, something that's going to give us an opportunity to make a good return on our investment relatively soon, right? So we're focused on the here and the now. What is happening with the markets here and now? Now, the secret sauce is, rather than trying to predict all of these, crazy support and resistance levels, the market absolutely loves reacting off of round numbers. So we can literally pop in, there's a really nice little bit of support here, as you can see, right? Really nice little bit of support. Funnily enough, it's around a round number, which is 1.31. You can see how reactive that level can be, especially in recent times. And we could take a look and we could see if there's any other support and resistance. Look, there's a really nice one here. You can see it acted as resistance, resistance, support, support, resistance, 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 support, support, resistance. Look at the number. Again, it's 1.34, a round number. Round numbers are so underestimated when doing your analysis. And actually, they're so incredibly effective, so effective. And it takes a lot of the guesswork out of it. You can literally go, okay, 1.31, that you can do, a reaction at 1.32. You can look at 1.33, right? And you get a good idea as to where the market is likely to go next. So when we were here, I'm going to take a couple of these levels off. When we were here yesterday, we were above 1.34, but we're getting sell signals on CSI, which is effectively telling us this is likely to start rejecting. Okay. Right? You can go the extra mile if you wanted to, and you can go, right, well, there's actually some really nice potential diagonal support that's going to come in, or diagonal resistance, which you can see actually acted really nicely there as well, right? So we've got a trade that is obvious, right? You guys understand that? One of the best bit of advice that Andy gave me when I first started trading was trade the obvious. If you trade the obvious, it's higher probability and it's easier for you to execute. If it's not obvious to you and it doesn't make sense, why are you investing your money? Because it needs to be clear. It needs to make sense, because that's what fills you with confidence and that's what makes it easy to execute. So hopefully that makes sense. So what we've done here is we've analyzed CSI to identify the opportunity, and we've done some very, very simple technical analysis, round numbers, and some diagonal support and resistance to say, are we in an area that makes sense to short it? And the answer to that question is a resounding yes. It does make sense. So this is a really nice reversal opportunity on GBPUSD. So then we move into the daily time frame. This is sort of the area in trading where a lot of people then start to fall over, because they could have a really good strategy. They could have something that could work in the markets consistently, but they end up using so many different tools where they really start to kind of contradict and counteract each other, and it makes the whole execution and decision making process really difficult, really complicated, and really overwhelming. We've already made our decision that we are looking to sell GBPUSD. It's now our job to find a specific price or a specific area of interest where GBP USD is more likely to start selling off. So we can potentially make more money, right? And this is where we hone in. We find that specific price. So I really like to use moving averages or exponential moving averages. But the clear winner, the absolute best tool that I can show you guys is using Fibonacci. For those that don't know what Fibonacci is, Fibonacci helps us understand what wave of the market that we're in. The market doesn't move in straight lines. The market moves in waves. It goes up, it goes down, it goes up, it goes down, it goes up, and it goes down, right? Simple as that. So what Fibonacci does is it helps us identify those waves through what we call A, B, C, D movements. A, B, C, D. It helps us identify, whether we are in a B to C movement or a C to D movement, which is what I'll show you in a moment. All right. So here, I'm actually going to put in all of these levels here because all of this makes sense. Even on the daily, you can see that it makes sense. But I want to get an idea as to, where the top of GBP USD is. And that's where I like to use the fib. So our manual fibs here, can you see how they're actually giving us these A, B, C, D signals? So it's got a small A, B, and remember we move in A, B, C, D movement. So A, B, we're therefore expecting a C as a pullback. And then the D is the extension, right? When we hit that D, we're then looking at the market creating a new fib cycle. So this becomes the new A point, this becomes the new B point, and now we're expecting that C pullback to come in. Now, interestingly, on the daily time frame, that C pullback level won't be hit until here. 1.3252. If you wanted to make it really simple, it's 1.3250, right? Just as a simple number, rather than getting really, really specific. Just 1.3250. Anywhere in and around that area makes sense for this market to start pulling back to. So overall, it makes sense, and the fibs support our idea that this market is likely to go down, right? Everybody following along with that? Can you see how we've moved directly from some simple analysis on the daily to go, okay, yeah, we're in an obvious potential reversal area on the weekly, sorry. And then on the daily, we've just implemented one tool to go, this supports our short idea by understanding market waves. That the markets always move in A, B, C, D movements. They move always like this. If we've had an extension, we're going to expect a pullback. When we've had a pullback, we're going to expect an extension. That's what it's showing us. All right. So in this circumstance, we've had an extension, but we're expecting that pullback to come in, and we're getting in at a really nice premium price. Does that make sense, guys? Everybody following along with that? Make sense? Yeah. A couple of people on Facebook saying, yeah, cool. Excellent. Good. Okay, excellent stuff. The best part is that yesterday we had non-farm payroll coming out. Now, markets love to move. They love to either start trending or start reversing around high impact news events. So yesterday, I saw that we were in this area for a really nice short in GBPUSD, which at the time we were all the way up here. And I was thinking, right, this is where you really have to weigh up, what is the probability of this going down? CSI is telling us to sell. We're at a round number as a resistance line. That round number is also really reactive. We're at a channel resistance line as well. Instantly, there's 3 reasons as to why we should be selling this. Not to mention the fact that our fibs are supporting that this is going to be moving down. I won't go too in depth, but we do have reversal levels. This is what we call the 118, the 127, and the 144. These can act as really, really nice little reversal areas. And you can actually see the market bounced and rejected off of the 118. All right. Now we move into how are we going to take advantage of this reversal movement, right? And this is where we move down into the likes of the 4 hour. All right. So again, our Fibonacci was showing us, okay, we have a really, really nice reversal area in there. So this is what we call our sell zone, our fade zone, according to the Fibonacci. Because remember, the markets move in A, B, C, D movements. We've had an A, we've had a B, we've had the extension, but we're expecting that C pullback to come in down here. So we actually still have quite a lot of room for movement available on GBPUSD, which I'll take you through an additional trade that we can take together. Okay. But this even further supports. This is a really nice area as a resistance. Non-farm payroll spiked up into that area, and we can then look to short it. But we need to therefore then look for the setup. All right. And this was the setup that I found. So looking at GBPUSD, it's really simple. Firstly, we look for what we call our market structure. So I want to see, how steep we are trending, whether we are respecting our trend lines. And this is very different as to how a lot of kind of other online trading gurus draw trend lines in, right? So we have really nice trend lines here, and the market, especially on the 15-minute, actually came up, and we had another trend line break right here. So we had this trend line break. Not only did we have a trend line break, but we also broke previous lows. So NFP came out, non-farm payroll, a really high impact news event. And what it did is it went and broke a really steep inner trend line, and it broke previous lows. These are 2 really core signs that a market is what we call changing structure. It's moving from this aggressive uptrend to something where actually it's starting to act differently. And now maybe is the time where we can start looking for sells. And this is exactly what I did. I put my fib tool back on. Lo and behold, We have our A, our B. I put my order at 1.3444, so about there. The market came up and hit it, and we were simply targeting a reversal level on the fibs and the next trend line. So this was our take profit right here. Yes, the market went on even further. That's absolutely okay. But this equated to about 3 grand, just over. From that move to that move. And that's a really high probability trade, because what we've done is we've created a story. We've created rational reasoning around why we should invest our money here. We've gone in with confirmation. Therefore, we've gone in with probability, right? To put it into perspective for you guys, when we see the market hit quite a key reversal area, which is what we saw on those higher time frames, right? That we saw on the daily. When the market is hitting these really key reversal areas, you can use these trend lines or trend line breaks as an additional confluence to look to enter the trade and to help time the market, essentially. Because when you see these inner trend line breaks, there is about, on average, an 80% chance that you're going to move from this trend line to the next trend line. That is an 80% probability trade. And it took a matter of half a day. You know, I entered it in the afternoon and it hit TP this morning, first thing this morning. All right. Quite mind-blowing, really, right? We haven't used anything crazy. We haven't used anything that's kind of out of this world and, you know, completely mind-boggling. I'd like to think we've kept it relatively simple. Would you agree? Yet we were still able to find this fantastic high probability trades. Again, you'll hear me say this loads, guys, so I'm going to apologize, but at the same time, it is for your benefit. Does this make sense? Let me know if you have any questions, and I'm happy to answer them as best as I can. All right. And then we're going to go over the good stuff on a second trade that is available on on GBPUSD. All right. Good. Good, good, good. Cool. So, on to the good stuff. We actually have a second trade that is available on GBPUSD. Sanjay, we've got a quick question. Was it 1, steep trend line break on the 15-minute, 2, then a previous low and break of structure? Yeah. And that led to the short order. Exactly. Yes. And funnily enough, we're seeing something similar on pound again. This time, we actually have a lot more behind it. This has now turned into an even higher probability trade, believe it or not. I'm going to give you guys a minute to tell me why this second trade that we're going to take today is now a higher probability trade. I'm not. Hopefully you can hear me okay, guys. I don't, for some reason my my mic went off, so I don't know how much of it you missed. Yeah, don't know how much of it you missed. What I was saying was this second trade that we're looking for on GBPUSD, right? Why is it a higher probability trade than the first trade that we've taken? I actually said 20 points to Gryffindor, to anybody that can tell me why this second trade is a higher probability trade. I'm not guaranteeing that it will work because we can't control the market, but can anybody tell me why this is potentially a higher probability trade than the first one? So Sanjay, you say that there's institutional sells. Chris, you say that there's momentum. It's hard to slow down such a big move to the downside. Okay. Mitch, we're now trading with a new trend. I have to say, guys, amazing work. Well done. All of you are right. Think of it as, you know, you're kind of like a detective in the market, right? And I'm a big believer in like analogies and stories and stuff like that. It helps you guys learn, right? Think of yourself as a detective, right? When you go into the markets, you're doing all of your investigative work. You're trying to gain all of the bits of evidence as to why the market should be going up and why the market should be going down. You then use that evidence to then come up with a hypothesis and to then say, okay, this is what I think is going to happen, and I'm going to execute on that. You know, and you might then go and convict the right person, right? The markets are really similar. What we do is we're gathering all of our evidence and we're going, right, what's telling me that this market is going, in this case, is going to be going down? When we were up here, that right there is a higher risk trade, because there's actually not, even though we had some really good signals, there's not as much evidence, or there wasn't as much evidence up here as what we have now down here. Because now we have actually seen, we can see it before our eyes, that this market has aggressively moved down. We now have more information. It's amazing, because now we can make a much more informed decision. With this movement down, we've actually had a change in trend. Not only have we broken even more lows, but we've had this aggressive move down. We've broken another trend line, and our 50 exponential moving average has started to slope down, giving us an indication that this market is now looking at maybe turning to the downside. All right. So what's the setup? I hear you ask, right? What's the setup?
I have two orders. I have one here. 1.3375, because this is where the market is not only going to have another Fibonacci pullback, but it's on a really nice resistance level that we can see is reactive. It's on a Fibonacci pullback, and we're retesting that trend line that we've broken. And this fib tool is also giving us the prediction on what to expect, on where to target. And this is giving us the target of 1.3232. And this is exactly my order, guys. Literally, I've got an order in right there, target profit there, stop above the previous 8 point. A really nice 2-to-1 trade. This makes a lot of sense. It might take a while for us to get there, but that's completely okay. But this as a target makes good sense because it brings us right into the mix of this previous consolidation zone. Not only that, but we also have this target, remember? So that's where our expected minimum Fibonacci pullback is going to be on the daily time frame. And it's near enough right in that area. If you wanted to, you could take your profit there. And that's naturally an even higher probability trade. You'll make a little bit less money, not a crazy amount less. You make a little bit less. But even that as a trade is an excellent, excellent trade. Because we're detectives, we've got more information, and all we've really used is simple price action, some really simple technical analysis, and pairing it with Fibonacci and Fib pullbacks. Simple as that. You can take this to the next level as well, by the way. Which I'll show you in a moment. I've just realized that there's a few questions on Facebook. So Kevin, price has already broken the downtrend to show it's moving down, strong bearish candles. Yeah, absolutely. Chris, could it be like an 80% drop down equal to previous move? So not necessarily. So when I say that there's an 80% chance, of us breaking a trend line and then moving to the next trend line, it has to be realistic. So a movement from here to here makes a lot of sense. Like, it's very realistic. We're talking about some hourly candles, you know, all in all, you know, it would have worked out to be what, like 66 pips, something like that. 70 pips, maybe. That's a real. Now, even though the rule of a trend line break tells us that there's an 80% chance that we'll move to the next in a trend line, look at how much this actually has to move. Rather than it being 60 odd pips, this has to move 300 pips. That's a tall ask. So it's a mix between actually putting your logical brain on and going, well, what's the actual likelihood of us having a 300 pip move down to here? Based off of market context, everything that I'm seeing in the markets at the moment, I don't believe that we will reach these levels for a long time. I actually think overall, we're more so going to be going up in the long run. But what we're doing is we're taking advantage of what is happening in the market right now. Right now, we're experiencing a reversal on pound. And it's in and out. Done. If it puts money in the bank account, if it brings up your P&L for the week, you know, and gives you a nice little return, fantastic. You can be done for the week. Sometimes all it takes is just one trade. As Andy was saying, you know, you can put 1% risk on trades like this because they're high probability. You know, 2% return, average of 2% return a week, 8% in a month. You're basically passing a prop firm challenge. And the goal is for you guys to, you know, become funded and to start making really good money from trading. Not trading with like a $200 account with your own money. You're not going to make any money doing that. The goal is for you to get funded with a prop firm and trade their money instead of your own. And you can scale it up. All right. So hopefully that makes sense, guys. Hopefully that makes sense. Moving on into how you can take this to the next level is you can time the market. You're probably going to think, what do you mean time the market? Are you going crazy? What does that even mean? Really simple. Rather than you having what we call the set it and forget it approach, the set it and forget it, where we've put an order in here, we have a wide stop and a sensible target. What the set it and forget it does is it leverages time. For those that are working full time, for those that don't have a lot of availability in front of the charts, this as an order makes really good sense. Because you literally put the order in and you just let it run. If you get stopped out, you get stopped out. If you hit TP, you hit TP. Great. It's done. But there are ways that you can extract quite a bit more money out of the market if you time the market in the right way. And this is where we use something called the market timing indicator. So let me bring that up here. I'm going to take this, and I'm actually just going to put it onto the other chart just to tidy it up a bit. All right. The market timing indicator. I'm not going to get into all of the nuances around the market timing indicator. It's actually part of our CSI 2.0 program, which our students, you know, they're in the final week of our second intake. So it's still a new program. And some of the students are absolutely killing it. I know, Geordie, you're getting a really good return at the moment. You know, some people have, you know, fully developed their strategies and they're starting to become a lot more consistent in their trading, which is amazing. They all utilize the market timing indicator here. The market timing indicator does what it says on the tin. It helps time the market. So what I would like to see is for this market to move above 80. And then we can look to just capture that small turn in the market and go with momentum. It requires more availability. It requires more activity. But if you can pinpoint where that high is likely going to come in, whether that be up here or whether that be up here or wherever, you can naturally have a much tighter stop loss. So this trade will give us a really nice 2 to 1 or 1.9 to 1, right? Excellent. But if, for example, you wanted to time the market, you could get in at a slightly worse price, but your stop loss could be above that little high there. And you can catch the same move. And rather than a 2 to 1, you could get about a 6 to 1. And that's where, you know, you can start making some really, really good money in the market. Let me show you an example of, you know, how this can work. So a really good example is, I think on the 4-hour time frame, actually. Let's put our moving average on, right? So let's take this as an example here. I took this trade. I had an order. This is on the 4-hour time frame. I had an order at 1.31266, stopped below the low, and I was targeting the fib extension. Nice 2-to-1 trade, right? But the thing is that's a 2% return, and it would have taken from Wednesday to Wednesday. So that would have taken a full week to complete. So that's a 2% holding the same position for a full week. Don't get me wrong, that's absolutely amazing. But when you're using the market timing indicator, this is what would have happened. Let me bring, sorry, I thought I had it on my screen. Right. So you could have marked out that level there, and let's put that on and copy and paste it over into the 1 hour as an example. Right. Notice how the market came down and it actually gave us an oversold signal right there. And you could have gotten in on something like this instead. So let's put this in. And still gone and targeted here, or the 200. In that case, it wasn't necessarily the best. You know, you could go down into, you know, the likes of the 15-minute or something like that. Where did it go? Oh, here we are. You know, and we want to use the market timing indicator across multiple time frames. So look, there we go. Perfect. So using the likes of like a 15-minute or something like that, this would have allowed you to have taken a long position roughly around this sort of area here, stop there, target, put it on the 4-hour again. Rather than a 2-to-1, you could have gotten something relatively similar to a, you know, a 4.5-to-1, just by being more active and waiting for price to start turning and waiting for price to start moving in your direction and timing the market when momentum is about to come into play. There is a lot more money in timing the market compared to a simple set it and forget it trade. But the set it and forget it are less stressful and they leverage your time. So I don't really need to trade for the rest of the day today because, you know, I've made 3% on the trade from GBPUSD this morning. And it would be nice, not essential, but it would be nice to then have, you know, this trade pull off today. And I can just set it and forget it, and then we're done. All right. That brings us to an end on the breakdown on GBPUSD. So I'm going to finish off and just say, hey guys, do you have any questions? Is there anything that you're confused on? Anything that I can help with? Is there any particular time I'm analyzing the market? So I analyze the market usually kind of first thing in the morning, just to get an idea as to, where the orders are for the day. And that's where I like to do more of my set it and forget it. I like to be a lot more active. I'm trading for an hour and a half around New York. New York session at 1:30 UK time is where it's the highest volatility part of the day. And if you want to catch and time some really fantastic moves, it usually happens around New York. And it usually happens around news events. All right. So hopefully that answers your question. Cool. So guys, to finish everything up, I'm going to post it just one more time. If you haven't done it already, make sure... Did I just post the right one? I hope so. Yes, I did. That was a close one. If you haven't done it already, on the Facebook Live, comment raffle. And you'll get an additional ticket for the raffle on the 22nd. I've just posted a link for you guys to register for that raffle event. Make sure you sign up. In order to claim your prize, you have to be there. You have to be there on the 22nd. If your name pops up and you win the raffle and you're not there to claim it, it'll be going to somebody else and we'll redraw. We do this every year. A lot of you guys know the rules. But as I said at the start, this is the biggest year that we've done. We're giving away a lot. We're giving away literally thousands of pounds worth of content, learning, materials, tools. So it's absolutely worth joining, putting your name down. And we're going to be going live from today, going into tomorrow and Friday. So you guys are going to have 2 more chances to get more tickets. Okay. But I really hope that you've enjoyed today's session, guys. I think it's really valuable for you to see this, and I want to help all of you. So I hope that you've enjoyed it. I hope that you've gotten some value from it. Any questions, feel free to drop us a message directly. You can message us on Facebook, or you can email info@londontradinginstitute.com, and we can see how it is that we can help you further if needs be. But once again, guys, thank you so much for joining. Have a fantastic rest of your day, and I'll see some of you very shortly, and the rest of you I'll see tomorrow. Take care, guys. Have a good one.